Today, we're taking a look at some PERP scenario models, some analysis on Perpetual protocol. This is a project that we love the fundamentals behind. This is a derivatives exchange, a decentralized derivatives exchange. All right, so we're taking a look at some Perpetual scenario models today. PERP is a decentralized derivatives exchange, a very solid project that we've been talking about for quite a while here. And the price action recently has really been reflecting its fundamentals, its strength as a fundamentally sound project. Now, this is a project, or this is analysis that we were talking about to our pro customers in the pro customer webinar on Wednesday, but this is also some of the type of analysis that we do, or that I do on Crypto Foresights every week for Token Metrics TV. Now, on Wednesday, we were talking about how it might be a good idea to start taking some profits. And again, when you take profits on your crypto positions, you don't have to sell everything. You don't have to sell all your perp. Taking 5, 10% can be really productive to your overall portfolio at these key levels of resistance, right? So that was on Wednesday, and now we've seen the price drop from 17 and change to 14 and change, right? We know there's going to be resistance there. We know it might be a good idea to take some profits. Now, this drop, this correction, to me, I do not think it is indicative of PERP's fundamentals, right? It's not because PERP is a bad project. That's not why PERP's dropping. The PERP's dropping here more than likely because people had a round of buying at $3 and $4. And when people bought a month ago at $3 to $4, and then it runs up to 17 towards the top of the channel, people are of course going to be taking profits on a 3, 4, 5x investment that has returned, that had returns that rapidly, right? Now, we've got some channels and some trend lines drawn here, right? And just as kind of a gut check, if PERP stays in this channel, stays in these channels within these trend lines, where would its price end up given the position of these trend lines by the end of the year? Now, the end of the year is just an arbitrary date. That doesn't mean that we think PERP is going to peak or this market cycle is going to peak by the end of the year or at the end of the year. This is just giving us some constructive levels that we can look at to say realistically, if nothing changes about PERP's price action and we just stay in this channel and we don't break out according or based off of its strong fundamentals, these are kind of the price ranges for PERP that we were looking to be in. At the top, roughly $25, and at the bottom, roughly $9, with some $12, $13 to $18 ranges in the middle. Now, what we want to look at is PERP's dominance or market share in the total cryptocurrency space. It's rising. Why is it rising? Because PERP's a good project. PERP's a good project, and its market share or its share of the market as compared to the rest of the rest of the market or other cryptocurrencies in this space, it's going up. And we would expect it to continue to go up because it is a fundamentally sound project that probably has not reached its full valuation yet. And it's a continually growing space. Decentralized derivatives, we're seeing a lot of investment go into this space, a lot of money move into this space. Now, towards the top, again, using the end of the year as an arbitrary date marker, we can say we can produce estimations or scenarios towards the top of this channel of 0.111%, 0.0575% in the middle, or a bearish scenario in terms of PERP's dominance of 0.019%. Now, when we overlay those with the total cryptocurrency market cap scenarios that we're going to explain in just a moment, we can produce a price scenario matrix to figure out where realistically can PERP trade at over the next year or so. Right, so this is a logarithmic view, a logarithmic scale here on the right with a linear trend line. And this is total cryptocurrency market cap. This is all the money in the crypto space. And you can see that since 2013, 2014 back here, it has been increasing at a linear trend line on a logarithmic view. That equates to exponential growth with occasional parabolic separations or bull markets against this linear trend line fair valuation. Now, as measured from our peaks back in 2013, 2017, and currently, we can take a measure of the risk premium or risk tolerance of the market. We can say how much risk in terms of overvaluation from the fair value can we build? Can this market take? Well, historically, it's taken 1,200 days to fair value as the risk premium or as the risk tolerance, right? That means people were willing to enter the market up here at a $16 billion valuation when the days to catch up to the fair value trend line would have been 1,200 days or roughly 4 years. Now at $835 billion in 2017 and 2018, that number actually increased, right? We were 1,450 days away from our fair value, value trend line, right? And you can see that we actually are not at that point yet in terms of date of this fair value trend line, right? That's how overvalued we got over in 2017 and 2018. Now, recently, this peak at $2.56 trillion, we were only roughly 730 days away from fair value. Compared to other markets and other value assets, the way they're trading right now, with inflation at highs, with the strength of the dollar dropping, with the money supply doubling in the past year, we're expecting equities and other value assets like the S&P 500 to trade at very large risk premiums or risk tolerances because people don't want their money in dollars when when all of those macroeconomic factors are going on, when the money supply is increasing. So we can estimate that 1,450 days in terms of risk tolerance or days to fair value might happen again, right? But even if we build in some lower scenarios, 500 days to fair value, 750 days to fair value, and 1,000 days to fair value to be more conservative in our analysis so that we're not throwing out crazy bull market numbers, we can see that it's only a matter of time before we get to $2.6 trillion in total cryptocurrency market cap, where we recently peaked. It's only a matter of time until we get to $4.6 trillion. It's only a matter of time before we get to $7.8 trillion, right? So am I saying it's going to happen by the end of the year? No, but over the next couple years, we would expect this kind of growth to continue. Now, just one point of analysis, this green line, this is $600 billion. That's what Microsoft was trading at in terms of market cap in 1999, right? In 1999, when there was five times less money in existence, the money supply was 5 times lower than it is now. That was one asset. Now we're talking about the total cryptocurrency market cap in totality. So 2.6 trillion, 4.6 trillion, 7.8 trillion are very conservative estimates for the next couple of years. Could we see down price action in the meantime? Could we return? Could we go into a bear market? I don't think it's likely, but of course it's possible. Could we see downwards price action towards this trend line? Sure. But over the course of the long term, over the course of the next couple of years, we expect these scenarios to be realized. Now, we also, going back to PERP, have to layer in the inflation of the token supply. So we've layered that in, and I believe used 48 million PERP tokens by the end of the year as our arbitrary date. Now, if we use by the end of the year, or if we just use these market total cryptocurrency market cap scenarios of 2.6 trillion, 4.6 trillion, and 7.8 trillion, and then we use our end of year scenarios for PERP in terms of market dominance, we can construct a price scenario matrix where we see our most bearish scenario, which of course assumes that we get to $2.6 trillion, and maybe that'll happen by the end of the year, but it should happen within at least 2 years, right? 2 years we're 2 years away from $2.6 trillion being our fair value trend line, right? We're 2 years away from being at a $2.6 trillion valuation in total cryptocurrency market cap. So could it happen by the end of the year? Absolutely. But it should at least happen within the next 2 years if we maintain that trend line, right? So on the most bearish side, we're seeing $10.29 for PERP, but on our most bullish estimates, we're seeing $180. So is PERP by the end of the year going to go to $500? No, probably not. Is it going to go to 180? Probably not, right? This is our most bullish scenario. Our more likely scenarios by the end of the year, probably somewhere in this shaded region, somewhere between $30 and $60, right? which by the end of the year, should we see this bull market kick back up, that's great returns from where it's at right now at $14, right? So I've taken this chart data and constructed taken the table data and constructed some charts for you guys. This is a linear view. You can see our most bullish scenario here in green, our more conservative or realistic scenario here in yellow, and our red, more bearish scenario here in red, right? And this is just a logarithmic view of the exact same data. It's just a different scale. It's a logarithmic scale so that you can actually see these numbers here, right? So those are our PERP scenario models. If you had to ask me, Forrest, what's a realistic price target for PERP? I'd say anywhere between $50 and $60 for the foreseeable future. Could it be over the next couple months, or could it be over the next year, right? Both are valid, but somewhere around $55, $60, I think is completely reasonable for PERP to go up to, given its trend lines and given the total cryptocurrency market cap trends over the last 7 to 8 years. So back over to Ian.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.